Hello everyone, I hope that you all are fit and fine, and let me tell you that I am completely fine as well. In this video, we are going to quickly revise the provisions of TDS and TCS chapter for CA Intermediate Income Tax examinations. And before beginning the revision, as usual, my request to you is to like this video, subscribe to this channel and also share it with your friends because sharing is caring. Now, let us begin with the revision. Sir, firstly, let us start with TDS. What is TDS? Kanna, TDS means tax deduction at source. It means where a person is making a payment to another person, and if such payment is covered in the TDS provisions, then the person who is making the payment is responsible to deduct an amount of TDS and pay it to the government, and only the balance amount should be given to the person who is receiving the payment. Later on, when the person who is receiving the payment is paying his or her taxes, then the amount of TDS can be set off against the tax, and only the balance amount needs to be paid to the government. This is the concept of TDS. In detail, we have learnt it in the classes. Now, the person who is making the payment will be called the payer. Person who is receiving the payment will be called the payee. Here, in TDS chapter, the payer is responsible to deduct the TDS. Hence, the payer will also be called the deductor, and the payee who is getting the payment will also be called the deductee. Okay, so payer is the deductor, payee is the deductee. Now, in this chapter, whatever sections that we are going to learn, in all the sections except section 194E, the payee is going to be a resident. Only for resident payee, all these sections will be applicable. However, for 194E alone, the section is applicable to a non-resident sports person or entertainer. It means it is applicable to a non-resident. Fine. Now let us come to the sections one by one. Firstly, I would like to tell that TDS is generally deducted on payment or credit, whichever is earlier. Payment or credit, whichever is earlier. But the first section that we are going to learn is section number 192, which discusses TDS on salary. TDS on salary, and this TDS is deducted only on payment basis. So you should not see payment or credit, whichever is earlier. You should deduct the TDS only on payment basis. It is applicable to the salary type of income. Hence, when the employer is paying salary to the employee, and if the salary is more than the basic exemption limit, if the salary is more than basic exemption limit, employer should deduct the TDS and balance only should be paid to the employee. Sir, what is the rate of TDS? Answer is rate of TDS is average rate of tax. It means what? You have to find out the tax on the entire income of during the year, then find out the average rate, and based on that average rate only TDS has to be deducted every month. We have learned this in detail in the classes. Now let us discuss some more points in the salary TDS. Firstly, employer shall consider other details of other incomes, deductions and TDS if furnished by the employee. So employee will give the details of any other income other than salary, like income from other sources, house property, etc. All those income details the employee will give to the employer. Employer has to consider that also while deducting the TDS. Number 2, employer, however, should not consider any loss other than house property loss. So house property loss can be considered while deducting the TDS, but any other loss should not be considered. Next, if there is more than one employer or if there is a change of employer, then furnish the detail to the current employer in form 12B. Then, so it means what? If the employer is changing from one person to another person, then furnish the details of the previous employer to the new employer. Correct? Or if there are more than one employer, then furnish the detail to one of the employers. Next, it is the employer's responsibility to obtain a proof of number 1, landlord's name, address or PAN number in case there is an HRA and if the rent is more than 1 lakh rupees. Point number 2, if there is leave travel concession, then take the evidence of leave travel concession expense also. Number 3, if there is an interest on housing loan, then also collect the details of the lender's name, address and PAN number. And lastly, if any investment is made under chapter 6A deductions, then for such investment take the evidence. Fine. So all these points also have to be considered by the employer while deducting the TDS for employee. Now let's come to next section, that is 192A. 192A discusses about withdrawal from employee provident fund account, and here also the TDS only has to be deducted on payment basis. TDS has to be deducted on payment basis. Sir, on what amount TDS has to be deducted? On any amount if the amount is more than 49,999. So it means what? If the amount is less than 50,000, no need to deduct the TDS. If the amount is 50,000 or more, here be very careful. If it is exact 50,000, TDS has to be deducted. If the amount is 50,000 or more, TDS has to be deducted. And one thing you be very clear, Kanna, in the TDS provisions, except for two sections, that is 194N and 194Q, except for two sections, if at all there is a limit, and if the income or the payment crosses the limit, then TDS has to be deducted on the entire amount. See, for here also, for example, if the amount of withdrawal from EPF is 60,000, then on the entire 60,000, TDS has to be deducted. You get my point? Next, sir, what is the rate of deduction of TDS? The rate of deduction is 10%, and the person who is receiving the payment, that is the payee, should also give the PAN number to the payer. If the PAN number is not given to the payer, then in case of 192A, TDS should be deducted at MMR. MMR. What is MMR? Maximum marginal rate. And in case of individual, the maximum marginal rate is 42.74%. This we learnt in detail in the basic concepts chapter. Next, TDS will be deducted for 192A only if the withdrawal is taxable. So if the withdrawal is not taxable, example, in recognized provident fund, if the withdrawal is made after 5-year period, then it is not taxable. In such case, no TDS will be deducted. However, if the withdrawal is taxable, then the TDS will be deducted at 10% on the amount of 50,000 or more. Okay. Next, section number 193, interest on securities. For interest on securities, the TDS rate is what? 10%. TDS rate is 10%. Now let us see the various limits and exemptions. Firstly, if the interest exceeds 5,000 rupees, is more than 5,000 rupees in case of debentures of a public company paid to a resident individual or HF by account pay check. So if three conditions are satisfied, what are the three conditions? The debenture, it should be a debenture of a public company, it should be paid to a resident individual or HF, and number 3, it should be paid through account pay check. In such case, if the interest is up to 5,000 rupees, no need to deduct the TDS. If it exceeds 5,000 rupees, then only you have to deduct the TDS. Next, number 2, TDS should be deducted only if interest exceeds 10,000 per annum in case of 8% saving taxable bond 2003, 7.75% saving taxable bond 2018, floating rate saving taxable bond 2020. So in these three cases, what you have to do? You have to deduct the TDS only if the interest is more than 10,000 rupees. Now let us see various cases where TDS under 193 is not applicable. So on all the government securities that we discussed, other than these three securities that we discussed before, no TDS has to be deducted on government securities. Next, national savings certificate, no need to deduct the TDS on interest. Next, national development bond, national defense bond. Then if there is a 6.5% gold bond or 7% gold bond, then in such case up to 10,000 rupees no need to deduct the TDS. If it is more than 10,000, deduct the TDS. So in your notes, this 10,000 limit will not be written. Please make this small correction in your notes. So in case of 6.5% gold bond and 7% gold bond, up to 10,000 rupees no need to deduct the TDS. More than 10,000, deduct the TDS on the entire amount. Okay. Then if there is any security of central government or state government other than what we discussed above, no need to deduct the TDS. Then for listed demat securities, no need to deduct the TDS. If there is a debenture of Power Finance Corporation Limited and Indian Railway Finance Corporation Limited, no need to deduct the TDS. Next, if interest is paid to, hence if the payee, that is the person receiving the payment, is LIC, GIC, insurance company, then in such case no need to deduct the TDS. Okay, so this was section number 193. Now let us discuss section number 194. Section 194 discuss about dividend including deemed dividend. So for dividend and deemed dividend, when the person is receiving the dividend, it is taxable in income from other sources, correct? Hence, when the person who is making the payment of dividend should deduct the TDS at 10%. Deduct TDS at 10%. However, no TDS is required if the dividend is given to an individual in any mode other than cash up to 5,000 rupees per annum. So what is the total amount? Up to 5,000 rupees per annum. If the dividend is given to an individual in any mode other than cash, then no need to deduct the TDS. Then one more thing, no need to deduct the TDS if dividend is paid to life insurance company, corporation, general insurance corporation, subsidiaries of LIC and GIC, or any other insurer. In such case also no need to deduct the TDS on dividend. Next, let us discuss section number 194A. 194A talks about interest other than interest on securities. So interest on securities we discussed in 193. Now we are discussing interest on other than securities. Okay. What is the TDS rate? TDS rate is 10%. Is there a limit? Answer is yes. If the interest amount is up to 5,000 rupees, no need to deduct the TDS. Interest amount up to 5,000, no need to deduct the TDS. Also, this limit will become 40,000. Okay, and 50,000 in case of senior citizen. For what type of payment? If the interest is received on time deposit from banks or cooperative bank or post office, and also interest paid by cooperative society with turnover or gross receipts greater than 50 crores given to its members. So what did I tell? There is a limit of 40,000, and in case of senior citizen the limit will become 50,000 when what will happen if interest is given on time deposit, that is fixed deposit etc. of a bank, cooperative bank or post office, and also if a cooperative society whose turnover or gross receipt during the previous year is more than 50 crores, if such cooperative society is paying to the member, then it has to deduct the TDS. However, up to 40,000 or 50,000 as the case may be, no need to deduct the TDS. Okay. Next, if bank has a core banking system, then the limit of 40,000 or 50,000 will be applicable per bank. If the bank is not having core banking system, it will be applicable per branch. Fine. Next, in case of interest on compensation paid by insurance company awarded by motor accident claim tribunal, then the limit is what? 50,000. Up to 50,000 no need to deduct TDS, above 50,000 deduct the TDS. Then one more thing, see here, this section is covered in hijack provision. See, there is no concept of hijack provision in your institute study material. We have only developed it for your class. It was given to me by my guru CA Anish sir. This hijack provision. What is hijack provision? It means that in section number 194H, 194I, 194J, 194A and 194C, in all these 5 sections, what will happen if there is an individual or HUF whose turnover or gross receipts in the business or profession as the case may be does not exceed 1 crore or 50 lakhs, then such individual or HUF need not deduct the TDS. You get my point? What did I tell? If an individual or HUF whose gross receipts or turnover or gross receipts in business or profession does not exceed 1 crore or 50 lakhs as the case may be in the preceding previous year, then they need not deduct the TDS. They did not deduct the TDS in section 194H, 194I, 194J, 194A and 194C. Now we are discussing 194A. So here also hijack provision will apply. It means that individual or HUF who are covered in this provision need not deduct the TDS. Okay, on any amount, so they need not deduct the TDS no matter what the interest is. Fine. Now next one, no TDS on following interest. So no need to deduct the TDS if interest on loan is given to bank, cooperative bank, financial institutions, LIC, UTI or any insurance company. If a partnership firm is paying interest on capital to partners, then no need to deduct the TDS. If government is paying interest on income tax refund, then no need to deduct the TDS. If interest is paid by cooperative society with turnover of gross receipts up to 50 crores, then no need to deduct the TDS. If it is more than 50 crores, then they have to deduct the TDS, and for that also there is a limit of 40,000 or 50,000 as the case may be. If interest is paid by primary agriculture credit society on deposits made with them, no need to deduct the TDS. Interest on saving bank account, no need to deduct TDS. Interest on zero coupon bond, no need to deduct TDS. Okay. In zero coupon bond there will not be any interest also, but on the discount amount also no need to deduct the TDS. Okay. Then from interest on national saving certificate, national skill development fund, deposit with housing and urban development corporation, that is our HUDCO, then Kisan Vikas Patra, post office monthly scheme, post office recurring deposit or any other notified scheme of central government, no need to deduct the TDS. Interest on fixed deposit in the name of Registrar General of India also no need to deduct TDS. Then if interest is paid to minor child, if they have filed the declaration under Rule 37BA, no need to deduct TDS. Then interest on capital gain account scheme given to legal heirs, okay, when the holder is deceased, then also no need to deduct the TDS. So in all these cases, no need to deduct TDS under section 194A. Now let us come to the next section, that is 194B and 194BB. 194B and 194BB are both applicable on winnings from betting, lottery, gambling, crossword puzzles, card games, and winnings from horse race, etc. In both these sections, the TDS rate is what? 30%, and here also TDS has to be deducted only on payment basis. Only on payment basis. But however, there is a exemption limit. What is the limit? Up to 10,000 rupees of winnings, no need to deduct the TDS. Only if the amount is more than 10,000, TDS has to be deducted at flat 30%. Flat 30%. Now, sometimes what happens? Winnings are given in kind. For example, a person is giving a car to another person as a winnings. However, when the person is giving the car, he cannot split that car into 30% and pay to the government. Hence, if the person is not having money to deposit the TDS, what he should do? Listen here. If winning is in kind and cash is not available to deduct the TDS, the payer should make sure that tax is paid by the payee before releasing the payment. So the person who is receiving the gift should pay the taxes to the government. Only then that winnings should be given to the person who is receiving the winnings. You get my point? Next, let us discuss section number 194C, payment to contractors. So for payment to contractors, what is the TDS rate? TDS rate is 1% in case of payee being an individual or HUF. If the payee is other than individual or HUF, the TDS rate is 2%. So if the payee is individual or HUF, 1%, other than individual or HUF, 2%. And here also, listen, hijack provision will apply. That is 194H, 194J, 194I, 194A and 194C. Now we are discussing 194C, and here there is a special point in hijack provision. What is that point? Generally, for individual or HUF whose for individual or HUF, if the turnover or gross receipts, as the case may be, is more than 1 crore or 50 lakhs in case of business or profession, then such individual or HUF need not deduct the TDS. Correct? However, in this section alone, this hijack provision is also applicable to AOP and BOI also, association of person and body of individual. Hence, in case of 194C, if the person who is deducting the payment is an individual, HUF, AOP or BOI, and if their turnover or gross receipts, as the case may be, in case of business or profession is up to 1 crore or 50 lakhs, then such individual HUF, AOP or BOI need not deduct the TDS if their turnover is up to 1 crore or 50 lakhs in the preceding previous year. Okay. Then what is the exemption limit for TDS? See here. If single payment is up to 30,000 rupees and aggregate payment is up to 1 lakh rupees, then no need to deduct the TDS. So TDS should be deducted only if a single payment is more than 30,000 or aggregate of all the payments during the financial year is more than 1 lakh rupees. We saw various examples also in class. Next, listen here. If a contract is of a personal nature, then also individual and HUF need not deduct the TDS. Individual and HUF need not deduct the TDS. Next, no TDS if payment is made to a contractor in a transport business owning up to 10 vehicles at any time during the financial year and he furnishes a declaration with PAN. Firstly, let us discuss what is contract. Contract means advertising, broadcasting, telecasting, carriage of goods and carriage of passengers other than railway. Hence, if payment is made to railway, TDS need not be deducted. Okay. Then catering, customized manufacturing using customer material or customer associate material. So, for example, I am giving a material to some other person and using that material I am asking that person to make a customized product and give me, then I have to deduct the TDS on the making charges. Similarly, even if my associate is giving the material and I am receiving the customized product, even that case also I have to deduct the TDS. Okay. So that is also included in the contract. So what and all is included in contract? Advertising, broadcasting, telecasting, carriage of goods, carriage of passengers, catering, customized manufacturing using customer material. Okay. And contract also includes subcontract. Now, carriage of goods and passengers is included in TDS, correct? In 194C. Now, in case of transport business, there is an exemption to deduct the TDS. Sir, what is the exemption? Listen here. If the contractor is owning only up to 10 vehicles at any time during the financial year, and he furnish a declaration that he is owning only up to 10 vehicles, and he is also mentioning his PAN number in the declaration, then for such transporter no need to deduct the TDS under section 194C. You get my point? So for transporter various benefits are given. Firstly, we discussed in PGBP chapter in section number 40A3. Generally, if cash payment or payment through other than prescribed modes is made to a person in a day more than 10,000 rupees, you remember, then it is not allowed. However, in case of transporter alone, it was 35,000. It was 35,000. Then we also discussed the presumptive income under section 44AE. The benefit of such presumptive income is given to a owner of goods carriage who is owning up to 10 vehicles during the previous year. And similarly, here also we are studying that for such people, that is the owner of a goods carriage who is owning only up to 10 good vehicles during the previous year, for them also no need to deduct the TDS if they are giving a declaration. Okay, next, in case of job work, TDS shall be deducted on the value excluding material if the material is mentioned separately in the invoice. So if you see the invoice, if material is mentioned separately and job work charges are mentioned separately, then deduct the TDS only on the job work charges. However, if it is not mentioned separately, then deduct TDS on entire amount. Okay. Next, no TDS if contract is incidental and compulsory to the transaction. So if contract is incidental or compulsory, it means what? For example, transport charges is charged of 10 lakh rupees along with the petrol sales of 5 crores. So for petrol sales of 5 crores, it was an incidental transaction. In such case, no need to deduct the TDS. Next, TDS is applicable on payment made by a client to the advertising agency. However, it is not applicable on payment by advertising agency to news channel. So see here, if a client is giving 10 lakh rupees to ad agency, then the client has to deduct the TDS. Now this ad agency will reduce its commission and it will pay balance amount to the news channel for displaying the ads. Now on the same transaction, no need to deduct the TDS once again. Hence on this 9 lakh rupees, TDS will not apply. You get my point? Next, TDS is applicable on payment by TV channel or broadcaster to a content producer if the program is as per their specification and copyright is also transferred. If not, no TDS. So I give you an example. If Sun TV is approaching Lycra Productions, now Lycra Production is making a TV serial as per the requirement of Sun TV, then Sun TV should deduct the TDS. Okay, and also giving the copyright to Sun TV. Next, what is one more example? If Lycra Production is already having a TV serial, the rights of that TV serial which is already made, if it is giving to Sun TV, in such case no need to deduct the TDS under 194C. So these were the provision of 194C. Now let us discuss section 194D, that is insurance commission. So when an insurance company is giving commission to an insurance agent, it will deduct the TDS at the rate of 5% and limit is what? Limit is 15,000. So up to 15,000 no need to deduct the TDS. If it is more than 15,000, deduct TDS on entire amount. Next, section 194DA talks about maturity or bonus amount of life insurance policy. So if life insurance policy is matured or bonus is given, then TDS has to be deducted at payment basis. On payment basis under section 194DA, the rate of TDS is 5% and it is not applicable if maturity amount is less than 1 lakh rupees. Hence, if the maturity amount is exact 1 lakh or more than 1 lakh, TDS has to be deducted. If it is less than 1 lakh, no need to deduct the TDS. Next, calculate the TDS only on the income portion. So total money minus total premium is equal to amount on which TDS has to be deducted. Okay. Then one more point, if the TDS is exempt under section 1010D, no need to deduct the TDS. Okay. And also in Keyman insurance policy, no need to deduct the TDS. Next, section 194E. So this is the only section which is applicable for a non-resident payee. Okay. So for whom and all it is applicable? If a person is a non-resident sports person, sports association or entertainer. In such case, TDS has to be deducted when the payment is made at 20.8%. Why 20.8%? It is 20% plus 4% health and education cess. Kanna, generally when a payment is made to a non-resident and if TDS has to be deducted, along with the TDS rate, health and education cess and surcharge also, as the case may be, has to be deducted. So there are only two sections that you are going to learn, where health and education cess and surcharge also will come including in the TDS chapter. What are those sections? Firstly, we learned section number 192, that is salary. So in salary TDS also, health and education cess and surcharge will be included in the TDS. And this next section is 194E. Here also, when a payment is made to a non-resident sports person, sports association or entertainer, health and education cess and surcharge has to be included in the TDS. You get my point? Next, National Savings Scheme, section number 194EE, which speaks about National Savings Scheme. So, if the amount of maturity that is given from National Savings Scheme is 2500 or more, then TDS will be deducted at 10%. TDS will be deducted at 10%. No need to deduct the TDS if amount is paid to the legal heir of the depositor. Next, section 194F. If a mutual fund will repurchase its own units, then it will deduct TDS at 20%. Next, 194G. When the lottery ticket agent will receive commission on sale of lottery tickets, then the lottery company will deduct TDS at 5% on amount more than, if the amount is more than 15,000 rupees. So up to 15,000, no TDS. If more than 15,000, TDS on entire amount at 5%. Next, section 194H. 194H talks about any commission or brokerage. Hence, for commission given by insurance company to agent, you have to see 194D. If the commission is given from a lottery company to lottery ticket agent, you have to see 194G. And for other commissions and brokerage, you have to see 194H. In 194H also, TDS rate is 5% and limit is 15,000. So if any commission or brokerage is more than 15,000, TDS has to be deducted at 5% on the entire amount. Okay. However, this provision is section 194H. Hence, it is covered in hijack provision. It means what? If there is an individual or HUF and if their turnover or gross receipts, as the case may be, in business or profession is up to 1 crore or 50 lakhs, as the case may be, in the preceding previous year, then such individual or HUF need not deduct the TDS under section 194H. Okay. And also, no TDS on brokerage on any stock exchange transaction, commission given to underwriters, brokerage on public issue, etc., paid in case of securities. Also, if commission is paid by BSNL or MTNL to its PCO franchisee, then also no need to deduct the TDS. However, nowadays PCO is very rare. Then one point I would like to tell for you to remember the provisions easily, that is, in case of 194D, 194G and 194H, all the three sections talk about commission, and in all the three sections the rate of TDS is 5% and the limit is 15,000 rupees. So it will be easier for you to remember. Next, section number 194I, which speaks about rent. So rent, in case of plant and machinery or equipment, if it is given for rent, the rate of TDS will be 2%, and if land and building or furniture or fittings is given on rent, then the rate of TDS is 10%. Next, if the rent is up to 2,40,000 rupees per owner, no need to deduct the TDS. Be very careful. The limit is per owner, not per property. Hence, if I have taken a house on rent, okay, and the total rent is 4 lakh rupees, but there are two joint owners, so I am paying rent of 2 lakh rupees each to each joint owner. Should I deduct the TDS? Answer is no, because the limit of 2,40,000 is not per property, it is per owner. So be very careful. Next, if rent is paid to the government, no need to deduct the TDS. Next, if TDS is applicable on non-refundable deposit, advance rent received and also arrears of rent. So TDS is also applicable on non-refundable deposit, advance rent and arrears of rent. If rent includes municipal taxes, no need to deduct the TDS on municipal taxes. Next, landing and parking charges which is paid by airlines to an airport is not considered as rent, it will be considered as contract. Next, if any cooling charges is paid to cold storage, it is not considered as rent, it is considered as contract. Next, one-time lease will also not be covered under 194I. And last but not the least, 194I is also covered in hijack provision. That means if there is an individual or HUF who has the turnover or gross receipts, as the case may be, in case of business or profession up to 1 crore or 50 lakhs in the preceding previous year, then such individual or HUF need not deduct the TDS. Okay. Next, section 194IA. it speaks about transfer of immovable property. Transfer of immovable property, which means land and building other than rural agricultural land, because rural agricultural land is not taxable at all, hence it is not included. What is the rate of TDS? Rate of TDS is 1%. Rate of TDS 1%. Next, what is the limit? Limit is less than 50 lakhs per transaction, and here be very careful. The limit is not per year, it is per transaction, and also the limit is less than 50 lakhs. Hence, if it is exact 50 lakhs, TDS has to be deducted. TDS has to be deducted. Okay. Next, actual consideration should be considered and not the stamp duty value. So here be very careful. We have studied sections like section 50C, section 43CA, section 56 210, etc., where we have to consider the stamp duty value instead of full value of consideration. Correct? In those sections you consider stamp duty value, but in case of TDS, when you see the limit of 50 lakh rupees, do not see the stamp duty value. You should see only the actual sale consideration. Okay. Next, the sale consideration also includes amount like club fee, parking fee, advance fee, electricity or water supply fee, maintenance fee, etc. Okay. So by whatever name called, if consideration is received, TDS has to be deducted on such consideration also. TDS is not applicable if transaction is covered under section 194 LA. In 194 LA, we will discuss about compulsory acquisition. In such case, TDS will not be applicable under 194 I, because it is applicable under 194 LA. Okay. Now let us discuss section 194 IB. Sir, section 194 IB also discusses about rent. We already discussed section 194I, which is also about rent. Here there is section 194IB. This is also about rent. Then what is the difference? I told you about hijack provision, correct? It means individual or HUF whose turnover or gross receipts is not more than 1 crore or 50 lakhs need not deduct the TDS, correct? Now, such individual or HUF have to deduct the TDS. The person who are covered in hijack provision have to deduct the TDS if they are covered under section 194 IB. Okay. So who have to deduct the TDS? An individual or HUF who is not covered under 194 I has to deduct the TDS under 194 IB. When will TDS be applicable? If the rent is up to 50,000 per month, TDS is not applicable. But if it is more than 50,000 per month, TDS will be applicable. Here you have to see the per month rent. Okay, not the entire year rent, per month rent. So what is the time of deduction? Generally, the time of deduction is payment or credit, whichever is earlier. However, here the time of deduction will be the credit of the last month of the year or last month of tenancy, or payment of last month of the year or last month of tenancy, whichever is earlier. Hence, TDS is deductible on the entire year rent. For all the months it has to be deducted. However, TDS has to be considered for the entire month rent, but it has to be deducted only on the last month. So for example, listen here. If rent is 60,000 per month from 1/4/2021 to 31st of March 2022, then what will happen? In every month, no need to deduct the TDS. Just come to the last month and consider 5% for all the 12 months together, which is 36,000, and deduct the TDS and pay the balance amount only to the person who is receiving the rent. Okay. Now, what happens? We will study section 206 AA, where it is given that if PAN number is not submitted, then TDS has to be deducted at 20%. In such case, if the rent itself is not sufficient to deduct the TDS amount, then the maximum TDS amount will be the amount of rent. So here, listen, if as per section 206 AA, if the payee does not furnish the PAN number, then TDS shall be 20%, correct? However, if the deduction of TDS cannot exceed the total rent of the last month, so maximum TDS can only be the total rent of the last month. Okay. Next, section 194C. It talks about specified agreement under section 45(5)(a). Specified agreement under section 45(5)(a). The rate of TDS is 10%. Sir, what is this specified agreement? It is nothing but joint development agreement. This you should link with the capital gain chapter. So if at all there is a joint development agreement and the builder is paying any amount in cash, then on that cash amount, TDS has to be deducted at 10%. Okay. Next, section 194J, very important section. There are 5 types of payments that are covered under section 194J. Number 1, fee for professional service, number 2, fee for technical service, number 3, royalty, number 4, non-compete fees, number 5, director fees. So what and all are covered? Listen very carefully. Fee for professional service, fee for technical service, royalty, non-compete fee, director fees. For all these types of payments, the TDS rate is what? 10%. TDS rate is 10%. However, TDS rate will be 2% for specific types of payments. For what and all? First and foremost, if a payment is made to a call center, TDS rate is 2%. Second, if the payment is fee for technical service, then also it is 2%. And if it is royalty in case of sale or distribution or exhibition of cinematographic films, then also TDS rate will be 2%. So in what and all cases 2% TDS? Number 1, if payment is made to call center. Number 2, if the payment made is fee for technical service. And number 3, if the payment made is royalty for sale, distribution or exhibition of cinematographic films. Okay. Now, what is the limit of TDS? The limit of TDS is 30,000 per annum. So up to 30,000 per annum, no need to deduct the TDS. If it is more than 30,000, deduct the TDS on entire amount. However, be very careful. This 30,000 per annum is a separate limit for each and every type of category. Okay. So for professional service, the limit is 30,000. For technical service, the limit is 30,000. For royalty, there is another limit of 30,000. Then for non-compete fees also, there is another limit of 30,000. But for director fees, there is no limit. For director fees, there is no limit. So even if 1 rupee director fee is given, TDS has to be deducted on that 1 rupee also. Next, no TDS on royalty or non-compete fees or director fees if the payment is made by individual or HUF. So if individual or HUF is making the payment of royalty, non-compete fee, director fee, in such case no need to deduct the TDS. And this section is also covered under hijack provision. Hijack provision, it means what? If there is any individual or HUF whose turnover or gross receipts, as the case may be, in case of business or profession, does not exceed 1 crore or 50 lakhs. In such case, 1 crore or 50 lakhs in the preceding previous year, in such case they need not deduct the TDS under section 194J. Then now what we are studying, if there is an individual or HUF, they have to deduct the TDS only for professional service and technical service. No need to deduct the TDS for royalty, non-compete fee, director fees. Okay. Then one more thing, if there is an individual or HUF and if they are paying a professional fees for personal purpose, then also no need to deduct the TDS. So in 3 cases, individual and HUF need not deduct the TDS under section 194J. Okay. Next, royalty includes software rights. And what is professional service? Professional service means all the professions that are included under section 44AA. And here it also includes sports professionals. Okay. Next, section 194K. 194K talks about income of units of UTI and mutual fund. So on such income, TDS will be deducted at 10% if the amount is more than 5,000 rupees. Okay. Next, section 194LA. 194LA speaks about compulsory acquisition of immovable property other than rural agricultural land. So if compulsory acquisition compensation is given, the government will deduct the TDS at 10% and then pay the balance amount to the payee. However, here up to 2.5 lakh rupees during the year. 2.5 lakh rupees during the year. If the payment is there, then no need to deduct the TDS. Only if it is more than 2.5 lakh rupees, deduct the TDS at 10%. And here compensation includes enhanced compensation also. Next, section number 194M. 194M speaks about contract, commission or professional service. Sir, we have already discussed the contract under 194C, commission under 194H and professional service under section 194J. Then why are we seeing this here? Answer is, there are certain individual and HUF who are not covered under those sections. That is hijack provision, the person who is giving a contract for personal nature or professional service or personal nature, etc. They were not covered there, correct? Such individual and HUF will be covered in this section. Okay, but this section will apply only if the amount of payment is more than 50 lakh rupees. So up to 50 lakh rupees, no need to deduct the TDS. If it is more than 50 lakh rupees for all the types of services combined, then you have to deduct the TDS at 5%. TDS at 5%. So for example, Mrs. X paid a brokerage of 6 lakh rupees, 5 lakh rupees for architect service and 40 lakh rupees for contract of construction to the same person who is Mr. Y, that is the builder. Now, individually it is not more than 50 lakhs, but if you combine all the three of them, what will be the amount? 6 lakhs plus 5 lakhs plus 40 lakhs. So total is how much? 51 lakhs. Since the total amount is more than 50 lakhs, TDS has to be deducted under section 5% at 5% on the entire amount. Okay. So I hope you are clear. Now let us discuss section number 194N. 194N. So 194N is applicable on cash withdrawal in case, cash withdrawal in excess of 1 crore rupees from bank, cooperative bank and post office. So if there is a cash withdrawal of more than 1 crore rupees, then TDS will be deducted at 2% only on the excess amount. Only on the excess amount. So on the first 1 crore, no TDS to be deducted. Only on the excess amount TDS will be deducted at 1%, and here also TDS will be deducted only on payment basis. Okay. Now one more special point, if certain conditions are satisfied, then there will be a different type of TDS. Okay, what are the conditions? If the payee, that is the person who is withdrawing the money, has not filed his return of income for all the 3 assessment year relevant to the previous year for whom the time limit under section 139(1) has expired in the preceding year, then it will apply for the returns of then TDS should be deducted as follows. So listen here. If while deducting the TDS, the bank notices that the person who is withdrawing the money has not filed his income tax return for the 3 years for which the due date is over, in such case the TDS will be deducted as follows. 2% on withdrawal above 20 lakhs up to 1 crore and then 5% on withdrawals above 1 crore. Okay, so here there is a slab rate of TDS. How is the slab rate? Up to 20 lakh no TDS, above 20 lakh up to 1 crore 2% TDS, above 1 crore 5% TDS. This slab rate of TDS will be applicable only to a person, okay, if the person has not filed 3 income tax returns for which the due date is already over. Okay, you get my point? I hope you are clear. Next, TDS is not applicable if the person who is withdrawing the money is a government, bank, cooperative bank, post office, business correspondent of banks or cooperative bank, white label ATM operators, or any other notified person. And 3 types of persons are notified. Who are those persons? Number 1, authorized dealer, agent of authorized dealer, sub-agent of authorized dealer, full-fledged money changers licensed by RBI. They need not, if they are withdrawing the money, TDS need not be deducted. Next, if commission agent or a trader operating under Agriculture Produce Market Committee, if they are withdrawing the money, need not deduct the TDS. Next, if cash replenishment agencies or franchisee agents of white label ATM operators are withdrawing the money, then also no need to deduct the TDS. In detail, we have discussed the meanings of all these terms in the classroom itself. So this is section number 194N. Let us start with section number 194O. Section 194O deals with the payment made by e-commerce operator. E-commerce operator. Firstly, let us understand the 3 terms, that is e-commerce, e-commerce operator and e-commerce participant. What is e-commerce? E-commerce means a supply of goods or service or both, or including digital products over a digital network. So if any goods, services or both or any digital product is given through a digital network, it is called e-commerce. Next, who is an e-commerce operator? An e-commerce operator is a person who manages the digital or e-commerce, the digital or electronic facility or platform for e-commerce. For example, Amazon or Flipkart. Who is the e-commerce participant? E-commerce participant means a person who is residing in India, selling goods or services or both, including digital products through the network. Hence, the person who is selling through Amazon or Flipkart will be called e-commerce or participant. The seller is called e-commerce participant. The platform is called e-commerce operator. That is, Amazon will be called e-commerce operator. Okay. Now, if an e-commerce participant is selling through an e-commerce operator, then while paying the payment to the participant, the operator has to deduct the TDS at 1%. Hence, Amazon has to deduct the TDS at 1%. However, if e-commerce participant is not giving the PAN number, then TDS has to be deducted at 5%. It should be deducted at 5%. Okay. Here, now let's see the conditions. If three conditions are satisfied, no need to deduct the TDS. If three conditions are satisfied, no need to deduct TDS. What are those three conditions? Let us see. 1 second. Listen. Condition number 1. If the e-commerce operator should be an individual or HUF. Condition number 2. The gross amount of goods or services or both should be up to 5 lakhs per year. And number 3. E-commerce participant should furnish the PAN or Aadhaar to the e-commerce operator. If these three conditions are satisfied, then the e-commerce operator need not deduct the TDS. Next, TDS is applicable on gross amount and not on the net amount. So on the gross amount of sales through Amazon, the TDS will be applicable, not on the net amount after deducting the commission, shipping charges, etc. There will be a net amount. No, that you should not consider. You should consider the entire value. Next, TDS is not applicable if the amount received by e-commerce operator for hosting advertisements or providing any other service not related to the sale of goods or services. So Amazon might also provide some other services like advertising, etc. On such services, TDS will not be deducted under 194.0. Okay. Next section, if TDS is deductible under 194.0, it cannot be deducted under any other section. So if two sections are clashing, then you have to consider 194.0. Don't consider the other section. Next, TDS is not applicable on securities or commodities that are traded to the recognized stock exchange. Next, TDS is not applicable on electricity, renewable energy, energy saving certificate which is provided by power exchange. Next, TDS payment gateway are not required to deduct the TDS if e-commerce operator is deducting the TDS for the same transaction. Payment gateway means what, Kana? The person who is providing the gateway for payment. Okay, for example, CC Avenue or Razorpay, etc. So see, for example, what happened? The customer will give the payment to Razorpay. Razorpay will give the amount to Snapdeal. Snapdeal will give amount to Mr. P, that is the e-commerce operator. Okay, e-commerce participant. Hence, listen here. Snapdeal, when the payment is given, so when the Snapdeal is giving the payment to the e-commerce participant, Snapdeal will deduct the TDS. Hence, Razorpay need not deduct the TDS on the same transaction. You get my point? Next. Now let us discuss section number 194P. 194P, TDS by specified bank. So if many conditions are satisfied, then the bank will deduct the TDS. What are the conditions? Number 1, this TDS is applicable only to resident individual whose age is 75 years or more. Okay, for other resident individual it is not applicable. Next, it is applicable only if the individual is having pension income and no other income except interest received or receivable from the account maintained by such individual in the same specified bank in which he is receiving the pension. So for example, a person is there, he is receiving his pension in his ICICI bank account. ICICI bank account. In such case, he should also be receiving only interest income, that also only through ICICI bank. Only in such case this section is going to apply. Okay. Next, individual will have to submit a declaration in form 12 BBA. So the individual, that is a resident whose age is more than 75 years, will have to give a declaration to the bank in form 12 BBA, in which the individual will be writing that I am having only pension income and interest income. Both the incomes are coming in ICICI bank only, and these are my deduction details under section 80C, 80D, etc. Now you itself collect the TDS by yourself. Okay. So if this declaration is given by the senior citizen, then what will happen? The bank will compute the income and tax of the individual after considering all the deductions under section 80C to 80U. They will consider the rebate under section 87A, and also while receiving the pension, if any TDS is already deducted on the pension, that TDS also they have to consider. After considering this, whatever is the balance tax payable by that individual will be deducted as TDS under section 194P. Okay. If the bank is deducting TDS under section 194P, then that resident individual need not file his income tax return. He is exempt from filing his income tax return. Okay. If conditions are not satisfied, the normal provisions as usual will be applicable. Next, section number 194Q, TDS on purchase of goods. and this has come into effect from 1/7/2021. 1/7/2021. So what happens now? If goods are purchased, then the person who is making the payment for purchase has to deduct the TDS. So every buyer who is responsible for paying any sum to a resident seller for purchase of goods or value of the value or aggregate of such value more than 50 lakh rupees during a previous year, then is liable to deduct TDS at 0.1% on the sum exceeding 50 lakh rupees. So listen here, what will happen if a buyer is buying goods of more than 50 lakh rupees, then on the amount in excess of 50 lakh rupees. So it means for the first 50 lakhs no need to deduct the TDS, only if the amount is more than 50 lakhs on the excess amount alone deduct TDS at 0.1%. 0.1%. Okay. Now, this deduction is to be made on payment or credit, whichever is earlier. Next point. TDS under section 194Q is not applicable if TDS is deductible under any other provision, or TCS is collectible under section 206C except section 206C 1H. Hence, if any other TDS section will apply, then this TDS section will not apply. And also, if there is any TCS section, okay, other than 206C 1H, then also that section you have to see, don't see this section. Fine. This priority once again I will tell you in the end of this particular video, you will be able to understand. Next, listen. Hence, if both 194Q and 206C 1H that we are going to study are applicable on the same transaction, then 194Q will be applicable. Don't apply 206C 1H. Next, buyer means a person whose turnover or gross receipts from a business was more than 10 crores in the immediately preceding previous year. Hence, if a person's turnover, okay, was more than 10 crores in the immediately preceding previous year, only such person need to deduct the TDS. Others are exempt from this section or need not deduct the TDS. Buyer does not include any person who is notified by central government. Now see here, there is a transition provision, correct? The TDS is applicable from 1st of July 2021. So here we have to be very careful. While calculating the limit of 50 lakhs, you have to calculate from 1st of April onwards. But however, while calculating the TDS amount, you have to calculate from 1st of July onwards. So you have to be very careful. In detail, we have seen the examples in the classes. You will be able to understand. Next, TDS is applicable on purchase value. Hence, it is net of GST. TDS is not applicable on GST amount. So if there is 100 rupees plus 18 rupees GST, TDS will be applicable on only 100 rupees. It is not applicable on 18 rupees GST. Next, if PAN of the payee is not available, then deduct TDS at 5%. Generally, TDS rate is 0.1%. However, if the payee is not giving the PAN number, then deduct the TDS at 5%. Okay. Now listen. This section is also not applicable if transaction is done through recognized stock exchange. Next, this section is not applicable in case of a non-resident buyer, except where non-resident buyer is having PE in India and purchase relates to that particular PE. PE means what? Permanent establishment. So, to a non-resident, 194Q will be applicable only if that non-resident is having a permanent establishment and the purchase of goods is related to that permanent establishment. In other cases, a non-resident need not deduct the TDS. Next, if seller's whole income is exempt under section Income Tax Act, then TDS will not be applicable. If buyer whole income is exempt, then TCS under section 206C1H will not be applicable. Okay. Next, in the year of incorporation, this TDS section will not be applicable. So this was the TDS section under 194Q. You have to be very thorough since it's a fairly new provision.
Now let us discuss section number 194R, that is benefit or perquisite in the course of business or profession. So when a person is giving a benefit or perquisite in course of business, and if it crosses 20,000 rupees per annum, then on the entire value TDS has to be deducted at 10%. What is the TDS rate? 10%. However, this section is covered in hijack provisions. So now hijack will become what? Hijack R, because 194R is also covered there, which means if there is an individual or HUF whose turnover or gross receipts in business or profession, as the case may be, is up to 1 crore or 50 lakhs in the preceding previous year, then such individual or HUF need not deduct the TDS. You get my point? And one more special point, like 194B and 194BB, if at all the benefit or perquisite is given in kind and there is no cash to pay the TDS, then the deductor has to ensure that the deductee has paid the TDS to the government, and then only the person can release the benefit or perquisite. You get my point? I hope you are clear.
Next, this we have already studied, but I am revising once again. Generally, TDS is deducted on payment or credit, whichever is earlier, but for certain sections alone, it is deducted only on payment basis. What are those sections? Section 192, which discusses about salary; 192A, withdrawal from provident fund; 194DA, life insurance policy receipts; 194LA, compulsory acquisition; 192 and 192BB, that is winnings income; 194, that is dividend income; 194N, that is cash withdrawal. So for all these sections, TDS will be deducted on payment basis. Next. Okay. After deducting the TDS, the deductor is required to pay only the net amount to the deductee. Hence, the TDS deducted is also considered as income of the deductee. So here you should not get confused. So see here, if Mr. A is responsible to pay Mr. B 1 lakh rupees as interest, so what he will do? He will give 90,000 rupees to Mr. B and 10,000 rupees, that is 10%, he will give to the government as TDS. Correct? So now what is the income of Mr. B? Income of Mr. B will be this 90,000 rupees plus the 10,000 rupees. So income is how much? Income is equal to 10,000, 1 lakh. Hence, what I am trying to tell, this TDS of 10,000 will also be included in the income of Mr. B. Mr. B will not, cannot tell that I have not received this 10,000, that is why it is not my income. Like that, Mr. B cannot tell. Okay. Now, let's see section 206AA. Section 206AA. If the payee does not furnish the PAN number to the payer, then TDS has to be deducted at rate as per the section or 20%, whichever is higher. So higher rate of TDS if there is no PAN submitted by the payee. What is the higher rate? Rate as per section or 20%, whichever is higher. However, in case of 194Q and 194O, it is not 20%, it will be 5%. We have already discussed. And in case of 192A, it will be maximum marginal rate. This also we have already discussed. And in 194IB also we already discussed that the TDS amount cannot exceed the last month rent. TDS amount cannot exceed last month rent.
Now let us discuss section number 206AB and 206CCA. 206AB relates to TDS and 206CCA relates to TCS. So what happens is that if TDS or TCS, in case of TDS or TCS, if payee or collectee has not filed the income tax return for the last previous year for which the due date is over before the current previous year. So for example, what is happening? Let's say for previous year 22-23, we should see whether the TDS should be deducted or not. So which previous year return we should see? Previous year 2021. Because for 2021 only, the due date of filing of income tax return will be over before 22-23. So in previous year 2021, we should see number 1, whether the TDS or TCS was more 50,000 or more. 50,000 or more. If it was 50,000 or more, we should also see whether the person for whom the TDS is being deducted or TCS is being collected has filed their income tax return. So whether it is filed or not. If they have filed their income tax return, no problem. But if they have not filed their income tax return, then the TDS or TCS will be twice the TDS or TCS rate or 5%, whichever is higher. Twice the rate or 5%, whichever is higher. Okay. However, this section is not applicable for section 192, which relates to salary, 192A, which relates to employee provident fund withdrawal, 194B and BB, which relates to winnings, because already for winnings TDS is 30%. Why to do it at twice the rate? Okay. Then 194IA, IB and and M. 194IA, 194IB and M, which relates to immovable property, rent, which is the special section for rent, and special section for commission, professional fees and contract. Okay. And then also cash withdrawals. So for all these sections, this section will not apply. For remaining all the TDS sections, this section will apply. So if the if the due date for income tax return is over before the previous year, and in that year if the income tax return was not filed and TDS or TCS was above 50,000 rupees in that year, then in this year, that is the previous year 22-23, TDS or TCS will be twice the rate or 5%, whichever is higher. Okay, and also this section is not applicable to a non-resident who is not having a permanent establishment in India. I hope you are clear.
Next, all these small provisions you learn from the material itself. Now let us discuss other provisions. What is the due date to make the payment of TDS? Due date to make the payment of TDS is 7 days from the end of the month of TDS, and in case of March month alone it will be 30th of April. Okay, in case of TCS it is always 7 days from the end of month of collection of TCS. Next, due date of filing of TDS return. For the first quarter, that is quarter ending on 30th June, the due date is 31st July. For TCS, the due date is 15th July. For the second quarter, it is 31st of October. For TCS, it is 15th of October. For the third quarter, it is 31st of Jan. For TCS, it is 15th of Jan. For the fourth quarter, the TDS due date is not 30th of April, it will be 31st of May. That means 1 month extra is given for the last quarter. Okay, and for TCS, it will be 15th of May. Next, due date to furnish TDS certificate. So the person who is deducting the TDS has to furnish TDS certificate to the person from whom he has deducted the TDS. For salary, the TDS certificate due date is 15th of June, and for other than salary, it is within 15 days from the due date of furnishing the TDS return. Next, for section 194IA, 194IB and section 194M, there are some special provisions. Generally what happens when TDS is deducted, the person who is deducting the TDS has to get a TAN number, that is tax deduction and collection account number. Using this TAN number only, he is going to file his TDS returns, okay, and give the TDS certificate. But for 3 sections, TAN number is not required. PAN number itself is enough. That means permanent account number itself is enough. What are those 3 sections? 194IA, that is immovable property. 194IB, that is the person who is paying the rent other than 194I, and then 194M, that is contract, commission and professional service, which are not covered under the other sections 194M. So for these 3 sections, there is a different method to deduct and pay the TDS and file the TDS returns. So what is that method? Let us see. First and foremost, no TAN is required for the person who is deducting the TDS under 194IA, 194IB and 194M. The payer can deduct the TDS using the PAN number itself. TDS has to be deposited within 30 days from the end of the month in which it was deducted. So normal due date won't apply, special due date will apply. What is the special due date? 30 days from the end of the month in which the TDS was deducted. And for the return also it is the same due date. For payment also same due date, for return also same due date. Okay, and return is form 26B in case of 194IA, 26QB in case of 194IA, 26QC in case of 194IB and 26QD in case of 194M. It is an income tax form, TDS form. TDS certificate shall be submitted to the payee within 15 days from the due date to furnish the TDS return. Okay. Hence, the due date to furnish the TDS certificate is what? Within 15 days from the due date to furnish the TDS return. Okay. So these are the special provisions for 194IA, 194IB and 194M. Next, let us discuss what will happen if TDS is not deducted or not paid. If TDS is not deducted or not paid, then the person who is required to deduct the TDS will become assessee in default. However, the person can escape if the person who is receiving the payment, okay, is a resident and he has paid the taxes and furnished the return of income, and he has included the amount of payment in the return of income and also gets a certificate from a chartered accountant. So if these 3 conditions are satisfied, then the deductor will not be considered as assessee in default. However, from the date of deduction till the date of filing of return by the payee, interest has to be paid at 1% per month or part of the month. Okay. The same provision we have also discussed when we were discussing disallowances in PGBP chapter. Okay, you have to link with that. Now, interest for delay in deduction or payment of TDS. So if TDS deduction or TDS payment is delayed, then interest will be applicable. What will be the interest? First, if TDS is deducted or deducted but not paid, then in such case, simple interest at 1% per month or part of the month of late deduction, that is from the date on which TDS was deductible till the date on which TDS was deducted. So from deductible till the TDS was deducted for the entire period, 1% per month or part of the month. Next, 1.5% per month or part of the month, okay, in case of late payment. Hence, from the date on which the TDS was deducted till the date on which the TDS is paid. The date on which TDS is deducted till the date on which TDS is paid. You have to calculate 1.5% per month or part of the month for non-payment of TDS, okay, or TCS as the case may be. Next, 234E, fee for default in furnishing TDS return. If TDS return is not furnished on time, then late fees has to be paid at 200 per day till the default continues. However, maximum fees cannot exceed the TDS amount. So it is 200 per day or amount of TDS whichever is lower. So firstly, let us discuss the changes in salary TDS, that is section number 192. So there is no major change as such in this section. There is only one update. What is the update, sir? In this section, actually we are going to learn in the next video that now the tax rates have been changed. Okay, so now the new tax regime has become the default tax regime and the old tax regime has become the optional tax regime. So the Income Tax Act has switched both the tax regimes. That is why now the employer should ask each and every employee before deducting the TDS which tax regime the employee is going to choose. Whatever tax regime the employee chooses, under that tax regime TDS has to be deducted. You get my point? Sir, what if the employee does not choose any tax regime? In such case, the employer will deduct TDS under the default tax regime, that is section 115 BAC. So if employee does not choose the tax regime, employer should deduct tax under default tax regime. Wherever you find space, you can note this small point down. We will also discuss the same when we will be discussing section 115 BAC in the next video. Okay, now let's come to the next provision, section 192A, which is relating to withdrawal from EPF, the TDS that is deducted on withdrawal. Earlier we learned that if PAN number of the person who is receiving the payment is not given, then TDS will be deducted at MMR, that is the maximum marginal rate. However, now the MMR provisions have been removed, so the normal provisions which is relating to other sections of TDS will also apply to section 192A. So let us discuss in section 206AA. In section 206AA, it is given, right? If PAN is not mentioned, then what will happen? In this section, I have given a special point relating to 192A. You please strike this point off. Fine. So for 192A also, the normal provisions will apply if the PAN number is not mentioned by the payee. So this is a small amendment. Now let's go to the next amendment, section 193. Section 193 deals with TDS which will be deducted on interest on securities. In that, we had earlier studied that if it is a listed demat security, then no need to deduct the TDS. However, now this exemption has been removed. Hence, even if it is a listed demat security, TDS will be deducted. Okay, so this is one update. Please make the change. Now let's come to section 194B. Section 194B relates to winnings from lottery, crossword puzzles, card games. Correct? Now what has happened? There are a few changes that have been made in the section. What are the changes? Now the section specifically mentions betting and gambling also. So if there is any winnings from betting and gambling, that also will be covered under this section, that is 194B. Earlier also we had studied like that also, but now it is very specific that even if there is betting and gambling, 194B TDS will be applicable. Then in 194B, now online games have been removed from the section. Sir, why it has been removed? Because there is a separate section now for online games, which we'll be discussing after this. So online games will not be a part of section 194B. And one more small change is that now the limit has been changed to aggregate of 10,000. So limit is 10,000 only kana, but now it has become aggregate of 10,000. So earlier what used to happen is that, for example, there is a lottery company. Okay, there is Mr. A. Let's say earlier, I am talking about earlier what used to happen. If a person, Mr. A, won two lotteries, one lottery of rupees 6,000 and another lottery of rupees 6,000. Is there any need to deduct the TDS? Answer is no. No need to deduct TDS since the amount is within 10,000. Here also no need to deduct the TDS. But now, what we should see? What is the aggregate? If the aggregate amount throughout the year is more than 10,000, what is the aggregate amount? 12,000. So if the aggregate is more than 10,000, TDS has to be deducted. Okay. So that change is there in this section. Minor change, but it has a major impact. Now let's come to the new section. Puttam Pudiya section. Section 194BA. That is TDS on net winnings from online games. Okay. So if there is any winnings from online games, we have already studied the tax rate on that, which we studied in the income from other sources amendments. Now we are discussing the TDS on winnings from online games. So TDS rate also, like the tax rate, is 30%, and here the TDS is deducted at the end of the financial year. It is deducted in between also and at the end also. We will discuss how. Okay. First and foremost, in this section there is no limit. There is no limit. So from online games, even if a person is winning 100 rupees, TDS has to be deducted on 100 rupees. You get my point? Sir, now what is this online game, sir? Online games, to understand this income, you have to understand three terms. Okay? Online gaming intermediary, user, and user account. Sir, what is online gaming intermediary? Online gaming intermediary is an intermediary that offers one or more online games. So it is only the portal, or it is only the website or platform in which a person can go and play the online games. For example, Dream 11, PUBG. I have already discussed these sites. Then, sir, who is the user? The user is only the gamer kana, the person who is playing the game and winning. So any person who accesses or avails any computer resource of an online gaming intermediary is the user. And what is user account? User account is the account of a user registered with the online gaming intermediary. With the help of that account only, the user is playing the games with the online gaming intermediary and winning the prize money or any prize or gift. Okay, on this price only TDS has to be deducted. What is the rate of TDS? Rate of TDS is 30%. Is there any limit? The answer is there is no limit. Who will deduct the TDS? TDS will be deducted by online gaming intermediary. On whom the TDS will be deducted? The payee, that is the user. Okay. So now, in case there is withdrawal from the user account during the financial year, tax would be deducted at the time of such withdrawal on net winnings comprised in such withdrawal. In addition, tax would also be deducted on the remaining amount of net winnings in the user account as computed in the prescribed manner at the end of the financial year. So now what are they telling? There are two ways in which the tax is going to be deducted. Number one, the tax will be deducted on net winnings. Net winnings. Okay. So sometimes the player wins a game and sometimes the player loses a game. Let's say, for example, a player put in 100 rupees. Okay. Then after putting in 100 rupees as fees, he won 200 rupees. He also lost 80 rupees. In one game, he won 200 rupees. He also lost 80 rupees. So what is his net winnings? The net winnings is 120. So this is only the concept of net winnings. Very logical. You have to apply your common sense. You will get the answer. So that is net winnings. Now how will the TDS be deducted? See Kanna, this net winnings is there, no? This will be showing in the user account. User account. Let us keep this net winnings example as 12,000. For example, the net winnings is 12,000. So in the user account, it will be shown as 12,000. Let's say the user now decided on 31st of May 2023 to withdraw 5,000. The user decided to withdraw 5,000. Then what will happen? When the user is withdrawing the money and transferring the winnings to his bank account, then the gaming company or the online gaming intermediary should deduct the TDS and balance only should be given to the user. So when the user is withdrawing 5,000 rupees, what will happen? TDS of 1500. Okay, 30% of 5,000 is how much? 5,000 into 30% is 1500, correct? 1500 TDS will be deducted and balance money, that is 3,500 only, will be transferred to bank. Are you able to get my point? So when the person is withdrawing the money, TDS has to be deducted. Next, so now what is the balance amount, sir? Balance amount is 7,000. Now let us assume that this user has not at all withdrawn the money from his account and this money is lying in the user's account as on 31st of March 2024, that is in the year end. So whatever net winnings is there in the user account in the end of the year and the user has not withdrawn that amount, then on such amount also TDS has to be deducted and paid to the government, that is at the end of the financial year. So in this 7,000 balance also 30% TDS will be deducted, okay, which is I think 1050. So 10, am I correct? Let me check. Sorry, 2100. 30%, that is 2100 TDS will be deducted and this 2100 has to be paid to the government. Okay, the dates on which we have to pay to the government is as usual like the other TDS sections. In that there is no change. Now this point we have already learned similar point in 194B and BB. What is that point? If the net winnings is wholly or partly in kind and cash is not available to deduct the TDS, then payer shall make sure that the tax is paid by the payee before releasing the payment. So I had already taught you in that section, if winnings is given in kind, then if there is no cash available to deduct and pay the TDS, then what should the person giving the winnings do? The person should ask the receiver to first pay the tax to the government and on showing the proof only the winnings can be given to the person. This is similar to section 194B and 194BB, which we already studied. So let us summarize section 194BA quickly. Sir, on what is 194B applicable? Answer is winning from online game. Who has to deduct the TDS? Online gaming intermediary. Who is the payee? The user is the payee on whom the TDS will be deducted. Now, is there any limit? Answer is no. There is no limit. How will the TDS be deducted? On every drawings, the TDS will be deducted and whatever net winnings is there balance in the account as on 31st of March 2024, that is year end, then TDS has to be deducted on that. So this is the section, very simple, sweet and short. I think there is no complication in this, but important from the exam point of view also. Now let's come to the next section, Karna. That is section 194N. So here also one small change. In 194N earlier, that is cash withdrawal, okay, from the TDS deducted on cash withdrawal, correct? In that we had learnt the limits. What was the limit? The limit was up to 1 crore, no TDS used to be deducted. Now for cooperative society alone, that 1 crore limit has been increased to 3 crores. 1 crore limit has been increased to 3 crores. And even when it comes to the other cases, that is earlier we used to see that if the return of income has not been filed, then 2% up to 1 crore was the case, and 5% above 1 crore was the case. Here also the limit has been increased to 3 crores in case of cooperative society. Okay. Next. Okay, in section 194R and section 194Q, earlier we had learnt the big circulars, no? There were many FAQs, frequently asked the questions, which was released by CBDT, but now they have been removed from your syllabus, so no need to overcomplicate these sections. In simple way, if you learn, that is enough. Next. Okay. Now let's come to section 206AB, which is relating to TDS, and 206CCA, that is relating to TCS. Okay. So this is what the TDS provision in case of non-filers, the person who have not filed their return of income in the last previous year. For them there is a different rate of TDS, higher rate of TDS, also higher rate of TCS, which we had studied earlier. But now there is one exception in this section, extra exception. What is this exception? The exception is that now this section is not applicable on a person who is not required to file the return of income for the previous year. Very logical, because earlier we had discussed, if the return of income has not been filed, then the TDS will be, or TCS will be at a higher rate. However, what if the person was not at all required to file the return of income? Then why to punish such person? Hence naturally now that person is coming in the exception category. If the return of income itself was not required to be filed, then you can deduct the TDS normally or collect the TCS normally. No need to follow this section. Okay. Next, now let us discuss about TCS. TCS means tax collection at source. Tax collection at source. So what is difference between TDS and TCS? TDS is tax deduction at source, TCS is tax collection at source. In TDS, the payer is the deductor, hence the payer is required to deduct the TDS. However, in TCS, the seller, that is the payee, the person who is receiving the payment, should also collect the TCS from the person who is giving the payment. Next, generally it is deducted at payment or credit, whichever is earlier. It is deducted when the payment is payable by the buyer or actually paid by the buyer, whichever is earlier. Okay. Here also there are certain exceptions. There are certain exceptions. Now let us see the different types of applicability and rates of TCS. Firstly, in case of alcoholic liquor for human consumption, scrap, coal, lignite and iron ore. For all these items, TCS is 1%. Next, for timber, forest produce except tendu leaves, TDS rate is 2.5%. For tendu leaves, TDS rate is 5%. Sorry, TCS rate is 5%. Next, if the person is granting lease or license etc. of a parking lot, toll plaza or mine or quarry, in such case the TCS rate is 2%. Next, if there is any receipt of consideration on sale of motor vehicle of value exceeding 10 lakh rupees per vehicle, then TCS rate is 1%. Next, in section 206C1G, if there is any remittance outside India above 7 lakh rupees, or if there is a overseas tour package, in such case 5% TCS. Then in case of 206C1H, which we are going to discuss, 0.1% TCS. So these are all the TCS rates. TCS however will not be applicable if the buyer is a government or embassy or consulate or high commission or institution as per the United Nations Act of 1947. Okay. Next, if first three items, that is this alcoholic liquor, scrap, coal, lignite, iron ore, timber, forest produce and tendu leaves, if all these items are consumed for personal purpose, then TCS will not be applicable. TCS will not be applicable. Then TCS is not applicable if buyer is a resident and furnisher is a declaration that goods are used in the manufacturing or power generation. So if buyer is furnishing a declaration that the goods are used in manufacturing or power generation, in such case TCS will not be applicable. Next, here also there is a provision where TCS is applicable at double rate or 5%, whichever is higher, if PAN number is not furnished by the person making the payment. Okay. Now let us discuss section 206C1F. In 206C1F, that is TCS on sale of motor vehicle, what did we learn? That TCS is applicable on consideration received on sale of motor vehicle of value more than 10 lakh rupees. So value if per vehicle is more than 10 lakh rupees, TCS has to be collected from the seller, okay, along with the sale consideration. At what percentage? Percentage we already studied. It is 1%. 1% TCS. Next, TCS will be collectible only on receipt basis. TCS is collected only on receipt basis. TCS is not applicable if sale is made from a manufacturer to a dealer. That is B2B sales, TCS is not applicable. Only for business to consumer sale, TCS will be applicable. Then TCS is applicable on the per vehicle transaction, not on the full consideration during the year. This limit of 10 lakh rupees should be calculated per vehicle and not the aggregate amount. Hence, if I am purchasing 10 cars worth rupees 8 lakhs each, so total amount is how much? 80 lakhs. Should TCS be collected? Answer is no. No need to collect the TCS under 206C 1F. Next, if 206C 1F does not apply, only then 206C 1H will apply. 206C 1H will apply. Now let us discuss section number 206C 1G. TCS on remittance outside India or sale of tour package with effect from 1/10/2020. So listen. When there is an authorized dealer who is receiving an amount of more than 7 lakh rupees in the previous year from a person who is remitting the amount out of India under LRS scheme of RBI, that is liberalized remittance scheme. In such case, he is required to collect the TCS at 5% in excess of 7 lakh rupees. So up to 7 lakh, no need to collect TCS. Only on amount excess of 7 lakhs, collect the TCS at 5%. Okay. The limit is to be calculated per dealer. Per dealer. So listen here. Okay. So for example, if there is a person who is giving rupees to an authorized dealer and collecting the dollars to send the dollars outside India, in such case, up to 7 lakh rupees, this authorized dealer need not collect the TCS. On excess of 7 lakh rupees, he has to collect the TCS at 5%. Okay. Next. If the remitted amount is out of an educational loan taken from a financial institution, then the TCS rate will be 0.5% instead of 5%. Generally, TCS rate is 5%. However, if the remittance is through a financial institution, is through an educational loan taken from a financial institution, then the TCS rate will be 0.5% and not 5%. Next, this section is not applicable if buyer is liable to deduct the TDS for the same transaction. Hence, if TDS is applicable, then on such transaction, this section, that is 206C 1G, will not be applicable. Now, this section, that is 206C 1G, is also applicable on Overseas Tour Program Package, OTPP, Overseas Tour Program Package. It means where there is a visit to any country or countries or territories outside India, including expense for travel, hotel stay, boarding, lodging, other expense, etc. So in case of overseas tour program package also, TCS has to be collected at 5%. Okay. Now let's come to very important change, that is 206C 1G, and here you are stuck in the transition provision. That is for May 24 and November 24 examination, it is compulsory that you have to learn the old provisions also, you have to learn the new provisions also, because in between the year the section has changed. Okay, so here we are discussing on TCS on the remittance outside India as per the LRS scheme, that is liberalized remittance scheme. Fine. Now a table is given below. In that table only the changes have been discussed, but what I will do is I will leave that table to you. You read that table so you will be able to understand. I am going to give you another chart, and from that chart I am going to teach you. So please, first and foremost, pause the video and copy down this chart from the screen. Okay, pause the video and copy down this chart. Done. Now let's discuss. So 206C applies to two kinds of persons. One, to authorized dealers, and second, to overseas tour program package. Okay, firstly let us discuss authorized dealer. What was the earlier provision and what is the new provision? First and foremost, when it comes to education loan nokanna, there is no change at all. Earlier also and now also, up to 7 lakh rupees there was no TCS required to be collected. Above 7 lakh rupees, 0.5% TCS. Now let's come to other than education loan, the education expense other than education loan and medical treatment. outside India, correct? Earlier also same provision, now also same provision. Earlier up to 7 lakh rupees, no requirement of TCS. Above 7 lakh rupees, 5% TCS. Now also it is the same. So where is the change, sir? The change is in the other types of payment. Okay, so whatever for other types of payment, if you are getting foreign exchange from the authorized dealer, then what was the earlier provision? The earlier provision was that up to 7 lakh rupees, the authorized dealer will not collect any TCS. Above 7 lakh rupees, the authorized dealer will collect 5%. However, from 1/10/2023 onwards, the authorized dealer will collect 20% TCS. This is one change. Now let's come to overseas tour program package. In overseas tour program package, earlier what did we study? Earlier we studied that there is no limit at all. Whatever per amount is received from the tour provider, 5% TCS will be collected. But now the provisions have changed. What are the provisions? Earlier it was 5%. So up to 30 of September 2023, what was the provision? Whatever amount it is, 5% TCS will be collected. But from 1/10/2023 onwards, the new provision is that up to 7 lakh rupee, 5%, and above 7 lakh rupee, 20% TCS will be collected. So the people who are going to a tour through overseas tour program package and spending more than 7 lakh rupees have to pay 20% extra as TCS. Okay, and there is one small point, and that is, in case of international credit card transaction, these international credit card transactions are not covered in liberalized remittance scheme. Hence, on those credit card transactions, the TCS will not be collected. Okay, this is one small note. So this also you have to note down. Fine. So now I want you to go through this table, and you will have even more clarity, and this chart will be enough for you to have absolute clarity in this section and to attempt any question. Next, section 206C1H, TCS on sale of goods and not services. So in case of sale of goods, every seller who receives an amount as consideration on sale of goods on value or aggregate of value exceeding 50 lakh rupees during the previous year, at the time of receipt, that means on receipt basis, he should collect from the buyer a sum of 0.1% of the sale consideration exceeding 50 lakh rupees. So what did I tell? If there is any seller, and seller means a person whose turnover or gross receipts from business was more than 10 crores during the preceding previous year. Hence, if there is any person who is a seller, and for such seller the turnover was more than 10 crore rupees in the preceding previous year, only then such seller will be liable to collect the TCS. Now how to collect the TCS? If the consideration received from sales is more than 50 lakh rupees, then only on the excess amount, that is on the amount more than 50 lakh rupees, the seller should collect the TCS at 0.1%. Okay, and here TCS is applicable only on receipt basis. In 206C1, in 194Q, we learnt about purchase of goods. There we learnt that TDS should be deducted on payment or credit, whichever is earlier. However, in this section, it is only on receipt basis. Okay. In that section, that is 194Q, we studied that it will be on the amount net of GST. But in this section, the amount will be including GST, because you have to consider only the consideration. You should not consider the sale value. Okay. Who is a buyer? Buyer is any person who is purchasing the good but does not include central government, state government, local authority, high commission, legation commission or trade representative, person importing goods, okay, and also exports. So on import and export, this section, that is 206C1H, will not apply. Next, this section does not apply on sale of service. So it will apply only on goods. It is not applicable on services. It is not applicable on export of goods. Next, if buyer is liable to deduct the TDS, then this section will not be applicable. Hence, if TDS is applicable, this section, that is 206C1H, will not be applicable on sale of goods. Next, if there is any section of other section of TCS which is applicable, then this section will not apply. Now let me tell you about the order of priority. See here, if there is any transaction in which two or more TDS or TCS provisions are clashing, then for which TDS or which TCS provision you should consider, let us see. Firstly, you should consider the TDS sections other than section 194Q as the first priority. Hence, if TDS other than 194Q is applicable to a transaction, then take TDS and TDS itself. Don't consider any other section. Next, second priority should be given to TCS other than section 206C 1H. It means what? If TCS under section 206C 1H, other than 206C 1H and 194Q and 206C 1H, if all the three are applicable to the same transaction, you should consider TCS other than 206C 1H. Okay, so for example, 206C 1F and 206C 1H are applicable on the same transaction, then which one you will consider? You should consider this, you should not consider this. You get my point? Next, rank 3 will be given to TDS under section 194Q and rank 4 will be given to 206C 1H, which is last priority. Hence, if in the same transaction there is 194Q and 206C 1H, then what will you consider? You have to consider 194Q. Don't consider 206C 1H. TDS will be applicable, TCS will not be applicable. Okay. TCS is not applicable on any securities traded through recognized stock exchange. TCS is not applicable on electricity, renewable energy and energy saving certificate provided by power exchange. Also, if any fuel is supplied to non-resident airlines at an Indian airport, in such case also TCS will not be applicable. TCS is applicable only on sale consideration received. Hence, the sale amount you should ignore. You should see what is the consideration received, and on such consideration you also have to collect the TCS. Okay. Next, since only consideration is considered, no need to make any adjustment of GST, sale return, discount, etc. So you need not see what is the sale amount, what is the GST amount, what is the sale return, what is the discount, etc. etc. Just to see what is the amount that is received. If the amount received is more than 50 lakh rupees, then on the excess amount you have to collect the TCS at 0.1%. Okay. Now, if buyer does not submit the PAN number, TCS rate will be 1%. Generally, it is 0.1%, but if buyer does not submit the PAN, it will be 1% TCS. So these are all the TDS and TCS provisions that we have covered. Now remaining is what? Advance tax and interest. This advance and tax and interest I am not covering in this revision lecture. I have already made a half-an-hour video, that is TDS, TCS and advance tax chapter part number 7, which will be available on my YouTube channel. That video, if you are seeing, you will be thorough with the advanced tax interest provisions as well. I hope you were able to revise this TDS TCS concepts on time. So keep preparing, keep revising. See you in the next one, dear. Till then, take care. Bye bye.